What's up, good people? How you doing? Welcome back to Stock Up with Larry Jones. If you are new to the page, go ahead, hit that like, subscribe, and then that notification bell, and make sure that you are getting updated on the latest breaking news as it pertains to your investing, stocks, and crypto. All right? If you've been rolling with the family, you know what to do. Go ahead and continue to hit that like button. Let's get right into it. Next week will be the biggest earnings week, I believe, in the past year. Now, if it's true, what a lot of analysts have been saying about a earnings recession, then next week, big tech will be reporting. So, as you could see here, we have three major tech companies actually that are reporting. We got Microsoft, and then we have Meta, which is Facebook. And then, as you can see, Amazon, all right, Alphabet. They're all reporting next week, starting with Alphabet, right? But you also see on Monday, you have two regional banks, Credit Suisse or Squeeze or whatever however you pronounce it. And then we have a First Republic Bank. I'm going to touch on those two at the end of this, okay? There may be some signs that we could do some plays and make a little money. I'm going to ask you what you think. Remember, anything I say is not a suggestion for you to buy, hold, or sell. Now, I have a short back and forth here with CNBC. I want you guys to listen.
Could tech do it? If it's not so bad next week, would that be the impetus for starting another leg up?
Joe, it's been remarkably quiet out there, but I think people looking at that broader index level and looking at these 0.1% moves up and down in the major indexes are kind of missing the picture, because underneath we are seeing these huge moves for some of these mega caps this week. You know, just Tesla's move yesterday down almost 10%. Netflix's move after its earnings this week. So that's kind of a warning sign going into this really important earnings week we have next week, with a bunch of those mega cap tech stocks reporting earnings. And, you know, zooming out, I think analysts are not expecting a great season. Analysts are expecting profits for information technology companies within the S&P 500 to fall around 15% for this quarter. That's more than double the decline for the S&P 500, and it would be the worst quarterly decline since 2009.
What are we deciding about 2023? This is going to be the low point. It's going to be flat. And then what do we know about 2024? Is there a resumption of better growth, do you think?
As you just said, I think 2024 just seems so far out right now. You know, so many investors already thought that we would be in a recession right now in the second quarter of 2023. And clearly that keeps getting pushed further and further out. But zooming out, it does seem like investors are expecting the worst of this earnings decline, of this trough for earnings, to kind of pass after this quarter. And that means, you know, what executives are saying the next few days, the next few weeks is really important. What are they saying about cost cutting? What are they saying about profits? You know, we had a number of companies just this week talk about layoffs. What are these companies saying about that? And so I think investors are going to be really focused on, you know, clues that they can get about the broader economy.
So there you have it. That is true. We will be checking out what's happening about the broader economy. We will also be closely watching these big tech companies. That is going to be a major key indicator as it pertains to earnings of how Q2 is going to go, right? And I've been saying that this is a sign. Now, I'm not going to let what I think fog up what's happening. I'm going to listen to the data. I'm going to listen to Microsoft, Meta, and Amazon, and I'm going to see. So just think of these companies. Microsoft, Google, what you're watching right now, Meta. Everybody you know has a Facebook account, right? These are key indicators of what's really happening in Amazon. I mean, if Amazon slows down and customers stop spending, okay, they have a good snapshot of what are you and I are doing, okay? That's just like JP Morgan. He has the data. He knows what you're putting on your credit cards. He knows how much credit card debt America is in. It's one of the biggest banks. And so this is how we could see how the economy really is doing, especially as it pertains to big tech. Now, if they start have negative earnings, one after another, we will be going down a earnings recession. Okay, but if all of the talk about an earnings recession was overinflated and they actually do good, I believe the second quarter will be a decent quarter-ish, all right? Not a bull run, but a decent quarter-ish, because that will renew, kind of strengthen the market. Bearing the Fed. Now, what is priced in right now is 25 basis points in May. And for those of you that's been trading for a while, there's a saying, sell in May and go away, all right? But let's see if the Fed keeps continually raising interest rates after May, all right? If he goes into June, and that's when we will see a lot of pushback as far as the Fed, him being too aggressive. Now, I also want to take a break right here real quickly and tell you guys about Moomoo. You guys know about the 15 free stock. You know it's the second link below. Let's take a look at it. I thought I had this up. Let's look at that. Download it. Get it up. Get your 15 free stock you see there at the bottom, depending on your deposit amount. Time is running out. Take advantage of it. Also, too, this is sponsored by Stock Up You. We just added 2 more lessons this week to the options class. As you could see here, we got options taught by Keenan Grace, but within his options class, Josh did a lesson and I did a lesson, okay? As we could see, big tech is trailing pretty good. Let's look at the day. This is Friday. Microsoft is pretty flat. Amazon is up over the last week. We could see that Meta is down. Now, there's a lot of people trying to see what Meta is going to do. All right. Over the last month, we could see that they're all doing well. Year to date, big tech has taken off. Big tech has really run. I believe that Meta is a little frothy right now. Now, this is year to date, right? Look at how green this is. Now, normally in a bull run, this would be good. But because we could be going into a earnings compression or recession, then what looks frothy to you? Nvidia looks frothy, meaning that it might be at the top, and Meta looks like it's at the top, all right? I think it's too much too quick, right? That's what I think, okay? So you trade according to how you want to trade. Now, let's go right into some of the regional banks that is reporting. All right, 2 of the regional banks that are reporting next week is First Republic Bank and Credit Suisse. These were 2 of the banks behind SVB that tanked. So now, what I did was I pulled up some banks here. Let's look, okay? Now, let's look at where we are today. Today, all of these regional banks, okay, Citizens has already reported, okay? U.S. Bancorp and Ally all reported already. So what I did was I took 3 regional banks and I compiled them with 2 major banks here at the bottom, right? Now, why did you do that, Larry? Because these have already reported, but we have First Republic and Credit Suisse that is due to report next week, remember? So we're just looking for opportunity. I'm just going to point some things out and you guys could do what you want to do. Now, as we look, we could see that Credit Suisse and First Republic are both reporting on Monday. So you guys tell me if you see opportunity or not. All I'm going to do is point in the right direction. Let's go back to the chart. So as we can see that these reported on the 19th. So let's go to 5 days. Let's go to the 19th. And as you could see, they ran up on the day of earnings. You could see that, right? Citizens ran up, U.S. and Allied ran up. Citizens 5%, Bancorp 5%, Allied almost 4%. You guys see that, right? Okay, they all ran up. But what happens afterwards? Okay, they all tanked. Not just the regional banks, but all banks. But if you look at the regional banks, remember, this is the 5-day, right? If you look at the regional banks, you could see that they have tanked more. And the big banks are still green. Okay, so that is not to say that First Republic and Credit Suisse will do the same thing. I just wanted to point some things out that after, so you guys know that I buy the rumor, sell the news when I'm doing calls or puts and options. So what I see here is there's a pattern that could say, hey, Larry, why don't we look at maybe doing a put, meaning you expect the stock price to go down on the banks the day of the earnings, okay? So the day of the earnings, betting that they will go down, right? And that's what it looks like, okay? Because of price action, or maybe the day before. Now, I'm not telling you what to do, but I'm just showing you how I look for plays, okay? Now, this could blow up in my face, and this whole theory could be wrong. I'm just going off the fact that 3 regional banks, 1, 2, 3, have reported, and they reported, and right after they reported, they started to fall. Okay? You guys, tell me what you think about this. Hey, if you say, hey, that's something I didn't think about, or shine the light on anything, let me know. We will be coming back to you live on some of these live reports, these earnings, especially big tech. And we will see, are we good for Q2, or will we be going into an earnings recession? Hey guys, make sure you check out the top link below in the description. You want to learn some of these things that I know and how I make money. It is all here. It is the cheapest class out there. One-time investment gives you a lifetime of access. This price that you see is still limited, and we will go from there. All right. Love you guys. Be safe. Have a blessed and wonderful weekend. Live, love, laugh, and learn.